VIX.X, Market Volatility Index, CVOE. Today's date, 8/24/2011. Time is 3:13 p.m. Pacific Standard Time, 6:13 p.m. Eastern Time. MMTs went through a great training session about how short-term bottoms get put in relative to intraday stock prices, and the reason why stock prices are moving up off of their bottoms like the way they are is because that fear indicator is pulling back from its peak. That was its first peak. When it went down in value, we had that rally up in the S&P. When that gapped up and made that high, we had them two big day pullbacks last week. Now that this is coming back, we're going to see that if this trend line, if that 20-day simple moving average on the fear index holds, then stocks are going to struggle. That means that if you don't break lower here, the majority of every intraday swing high reversal will be in. Stocks will be selling from the top down in greater value. You will still have that lower support level in the upside volatility intraday value. However, the majority part of the longer intraday movement on the 60-minute will reflect that stocks cannot regain their support levels, but rather sell through those support levels and go lower. If we start to tick back up and consolidate here, just like we gapped up and we sold off really hard 2 days last week, and the S&P has had a couple of updates. There's a video on the S&P. The VIX will go along with it, okay, because the S&P is tied to this VIX, Market Volatility Index. So if we consolidate here, the trade management will have a different scenario that we will deal with. And basically, the lower that we go, we've got the 1 day, the 2 day, the 3 day reversal. And we put bottoms in when this was reversing these days, we were putting bottoms in the indexes. And today, because of that, the S&P was up 55 handles and making higher highs and closing above the S&P 500 200 week moving average as well. Not only that, we've levered up 320.71 above the 11,000 mark. It's all because of that reversal. And that's how market bottoms get put in. And we already had the first pass. The nice thing about that gap up last week when we had them 2 days of selling is that if we break lower, we're going to have more of a short-term support for the days left in August. That's the back half. Today's the 24th. It's the dog days of August. Lighter volume and these things do that. We'll be monitoring it carefully. It's working just as we said it would. And it's working in the intraday trade management as we said it would. And we have verified it now for 3 days in a row. And the thing about it is, the lower it goes, the more support levels that we're going to have, and the better support levels we're going to have at every support level, because of the declining nature of this is giving this side the strength. And being able to use this as a laggard indicator, but it's what the public thinks about. Shows you where they're thinking. They're not so scared, are they? Because you're coming down in value. So anyways, just to give you another snapshot, is we have a great deal of market volatility. When we look at the weekly market volatility, we clearly see here where we peaked, right here. This is where we peaked on that wick. When that thing dropped, and that was where we peaked in that fear, and then we dropped here to the body of that, and then we dropped here. And now we're right back here on the weekly level. But just remember that you've had a pretty strong move in that VIX, and you have reversed in it on a weekly level. And a weekly level is a little bit longer term looking, but we can clearly see right here that that shoulder and that shoulder, this is the right shoulder and that's the right shoulder of so far, this is this week right now. And we continue to go lower, and the markets continue on a weekly level in the S&P, hold their weekly lows and didn't break those lows because of this reversal. And we talked about it, but we peaked, and we have This high is lower than that high, and this high, that means that these wicks going down so far this week means that stocks would bounce off of their level. They're in volatility trading ranges, top down, bottom up. But that lower support level intraday on stocks today showed a great bounce in Netflix, Amazon, Priceline, Google, across the board. Apple, another great mover today. Stocks held gains from yesterday's breakout to today's closing, and basically the leverage up trade to where I'm going to be looking at selling short again. If I'm going to hold overnight, I'm not buying any put options on the S&P as long as this is doing this. I'm buying calls off the bottom, and we cashed in on those today, and we're going to be buying some more on the index options in the S&P 500. And the thing about it is, the bottom up trade on the S&P, as long as this is going down in value, then we're going to hit the bottom support levels and bounce right up on the intraday levels. So the fear indicator is coming down. This is 3 weeks of that fear. Look at that peak and look at that 1 week that we had, but now we're declining. So as it declines, markets find support levels. MMTs.